Good morning, folks. It is 7:30. I'm a little over. Usually I'm a little earlier. All right. Excuse me. We just had jobless claims come out. Um, the continuing jobless claims were better than expected. The initial jobless claims were worse than expected. Kind of a little evenness across the board. PPI, little worse than expected on those, but nothing horrible. It's always difficult to gauge what sentiment is going to be on something that where the consensus, where the number beats the consensus, but is still lower than the previous, or vice versa. It's kind of a odd way of trying to gauge where something is going to go. Okay, looking at our trades yesterday. The first one that we had was a UJ long on a test of 11 on a retest of 11,585, which we did get, and it would have been depending where you got in, between 20 and 30 pips. So that would have been a nice little move. We did kind of get across that trend line, but we've really struggled to get back to anywhere back above that level. We kind of had that nice drive down, and we're still sitting around there and digesting this most recent news that came out. And then we had a New Zealand dollar trade where this guy is really overbought. On the monthly, on the monthly we are not in a we're really just very neutral in this pair. Let me turn my volume down on the phone there. Very kind of neutral here as far as where we are in the oscillators on the monthly. If we bring it down to the weekly, we're still, we are on the composite index, which is going to be the fastest response, which is the oscillator we kind of want to look at when we don't see our RSI in any kind of trending territory or near these any extreme levels. This peak here in structure and visually has been a previous level where things have been overbought and then sell off. If we look over here, we are kind of in a similar range on the composite index, but not on the RSI. We're a little, see, that's a value of 66 over there, and we're at 56 here, like 10 points lower on the RSI. This is this is kind of a signal that things may turn down pretty soon here. Switching over to the daily, well, we're in a divergence on the daily. We've been in a divergence on the daily for quite some time, where we have these really exceedingly elevated levels. But again, in strong bull markets, things can stay in overbought and oversold territory for quite some time. However, I don't see this pair going much higher. It's near a natural area of previous price resistance. It's coming up near an angle it has to retest, and to get through here, it would require a little bit of a pullback where these arrows are pointing down to. That's where, if we want to continue going long in the New Zealand dollar, we would want to come down, test this area, and then we have this time confluence area that happens on the 24th, so that's 13 days away. Talked a little bit about that yesterday. And then also on the 16th, we have a new moon. Now, a new moon if you remember when we've talked about this, that if we look at the moon phases, that new moons generally mean that we have been near a market high and that things should sell off. That does not always happen, obviously, right here, but that at full moons we are typically in market lows, and we buy those and we sell when we get to those. So in bull markets, the goal is to buy if it looks like we are at or near a historical or a short trend market low, and we're at a full moon, which is what we had 2 weeks ago, well, a little under 2 weeks ago. We would buy that, and then we'd hold on to it, and then we'd sell. Not necessarily go short, but then we would sell into the new moon. We'd wait, and then we would buy the full moons and go back up. Sometimes you do get the nice repeating patterns. It is a valid trading strategy. I use it in my trading quite a bit. It helps me kind of determine what the mood and bias is going to be. But as we get closer to market highs, we get kind of closer to that elevated kind of the mood and the sentiment changes. That's like the all-time high euphoria phase that we get to, and we'll see prices start to flatten out and decline until we get into the next full moon, which is all the way over in the 31st. So on the 16th, we'll have a new moon, and it would make sense for us to sell off from that area into at least the 382 area. The other trade we had was the euro pound. We had a short at 88.61, or we wanted to retest at 88.82, and that hit last night, and I'm in this one currently, and I'm okay with that because we haven't closed above this yet. I'm watching this closely because this is a natural harmonic level. We have this confluence of time and price. This is the 45 that is moving up. If we do close above this 45, if that stays where it is, and we start to trend higher, I have to, my stop will get hit up here, but right now this is a natural resistance area. It's not uncommon for prices to move through here and want to test it, but we'll know if we're going to start back into a new trend if we close above these areas. And so that'll be a nice thing to have happen. If we look at the daily, we are still in a kind of a range trade technically, but what we have here looks almost like a cup and handle. So I'll go like this. Now, I thought you could fill this in. Oh, yeah, there we go. Cup and handle formation means that it hits like a triple top, or if you have an inverse, a triple bottom. But then on the what this means is after you make the cup and then you make the handle, then the theory is that it shoots up, that we move higher. So if there's a true cup and handle, we should see price move higher, and then we have a nice kind of bias for a while to determine what's going on here. All right, but for right now, this angle is still technically being treated as resistance. We haven't broken above that or the 45, so this is going to be our best kind of trade setup. And I hear one of my cats meowing. This will be one of our best kind of trade setups to look at for short or long for a long-term trend trade. We'll just have to kind of see what happens. I really would encourage all of you to keep an eye on this, on your own charts, because the opportunity to get in early is right now, and we want to see where that's going to happen. On the hourly, we are really definitely overbought there. 4-hour chart, we're looking at the same thing. We've actually got a divergence happening on the 4-hour chart. We can see an obvious cup and handle formation on our oscillators, though. That's kind of cool to see that. All right. The trade after that was or the short was also at a more conservative 88.98. That's right. So that was up here. I took the I like to take the trades where I know I may get a fill. But so I'm comfortable with I'm comfortable with a loss up here. That's fine. You have to be, really the best way. I know if some people might ask, like, well, how can you be comfortable with those kind of stops? Well, I mean, you have to give yourself a wide variance. I don't know what the default is on all programs. I know on TradingView, when I connect it with Oanda, its default stops 25 ticks. I think that is nothing. I think 25 ticks or pips is an invitation to get your stop hit. You need to give yourself a wide variance. I need to give myself a wide variance, I should say. Yeah. All right, but let's take a walk here. I did not have a gold trade listed yesterday because we were in a funky zone, and I'm going to say the same thing. I don't have a gold trade because I don't see a good setup anywhere. We're still stuck in this range. We're approaching this. I might see a gold trade, coming up here on the. Let's put a vertical line on the 16th. And we'll keep it black because new moons mean no moon. If you ever need to figure that out, new moons mean there's no moon in the sky, and a full moon means there's a big bright moon in the sky. So no moon means new moon means no moon. Say that 10 times in a row. Okay. So if we're still trading around here, or even if we trade higher, I'm going to have a short bias as we get closer to this angle here, and as we get to this time, I'm definitely going to have a short bias. So this is kind of a matter of waiting. There is no immediate entry I see yet. The only area that I would be considering going short is if it breaks the we'll have to if it gets to 13.10.30, and I'll put that up in the portal here. So that should be posting on the portal here, and yes, those are kind of got to wait around here, but the dollar yen. If we get back up to the 111.60 area, I am a buyer here. Because long at 111.6, we've had a lot of attempts to go lower at this area, but we haven't. So we should still be looking at some pullback here. This wasn't much of a pullback at all. The weakness here is related to, we have some weakness in the dollar. The yen is definitely one of the stronger ones right now. But the dollar is the weakest, so those are generally good times to pick up something and have it reverse and go long. The euro pair, now this guy's in a good spot. I like this. So we had our shorts up here, had some nice entries and exit there. Added again. Now this arc is a resistance arc, so when price gets to it, and inside of it, and even a little bit above it, the behavior of price is to come down. It does not like to be inside this arc. All right. So, and we're really far from the 45 here, or not 45. We're far from the 2-1 line, and we're kind of in equilibrium, but we can still move down farther because we are still significantly overbought. There is a lot of buyers involved in this pair still, but it has shown some weakness down here. It looks like it wants to stay in this value area, but I am not a bull on this pair until we get to 121. So for right now, because we're still below those January 3rd through 7th trading zones, I'm still bearish here. I added 3 times this morning. Got hit here on that drive up. This move was related to the ECB saying that they're just gonna stay the same. They're not gonna do anything different. So we've got good volume bars though. That's good participation. Like to see that. But if you notice, the volume keeps going up as price keeps going up here. Actually, if we look here, volume bars are going up as price is going up. So that's important to notice. We actually do look like we have some divergence. Flat divergence, bearish divergence, where we have these higher highs, but we have flat levels, even lower levels in our RSI, and flat to lower levels on the composite index. So that is a bearish signal on the hourly. So, I mean, really short, anywhere between anywhere above 120, and then a stop is way up there still. $1.21 stop probably. So that's where I have it. Yeah, I have mine up there. Yep, perfect. Okay. New Zealand dollar. This guy is still a, what did we say yesterday? Short at 71.98. It did not work out. It actually just keeps moving higher. This is one of those New Zealand dollar, when it gets on a move, it likes to stay on a move for a long time. If we go back to last year, actually, we can go back to, I think it was June, maybe? Was that when it stopped here? July. All last year, the New Zealand dollar from March all the way to last part of July was just a major big move from 49 cents to 88 cents, almost 100% gain. Well, not really, but yeah, not really at all. What did I say? It's 49? No, not even close to 100% gain, but a significant gain of 40 cents over the year. And then we dropped down all the way to 60, and now we're just kind of floating around in here still. Kind of like almost stuck in a range. But you could say that we've broken out. But see, this is all movement from the holidays, and I don't put a lot of stock in that move. I do not. I'm not a fan of that. I want to see a test of the return of this level, and a test to see if it wants to keep these levels. But I don't like to go long when this business is going on. We have too much divergence on the daily and longer time frames. The monthly is neutral. The weekly is, what did I say? The weekly is almost overbought here. No, the weekly is like way overshot on the composite index. So that's a signal to be short. But because you want to be careful with the short here. Anywhere between point short anywhere between 0.72 and 725. Stop at 0.7325. That's kind of our long-term test angle here. We got that angle above us, but this one may get tested. This is the 45. But we are getting into this confluence zone, and that 16th is right here. It'll be really nice to get maybe even higher prices for better shorts while it gets up to this area, and we can have a nice little run down there. Aussie dollar. Very similar situation. We have elevated prices. The composite index, though, seems to be leading the move, but wanting to trend back up. These are not uncommon moves, but this was almost a little bit of a rejection here. This double bottom. Bring it down on the hourly though. It is a little rounded there. We got flagging pattern to do. Oop. I'm gonna watch this channel here. Break above this. I'm not interested in a trade here yet. It's too much indecision going on at this level. Inverse head and shoulders here. Draw that in there. Want to make the head and shoulders look like a head and shoulders. There we go. I'm not a huge fan of these patterns. I feel like chasing these patterns is kind of like chasing straights in poker. It's dangerous. Chasing flushes in poker, it's dangerous. You often get burned more than you can. Often get burned more often than not following these kind of patterns. Over to the British pound. I think that I have more structure on these. Let me make sure. Yeah, I don't know why I don't have this all on that chart. Huh? All right. The pound trade. We are down below the 45. All right. Actually, let me bring this out a little more here. So the pound dollar. In our square, we are still below the 45. We did get support on this angle, which is right near pivot. So we got to be aware of the supportive structure that was there. Now the only thing we have to really be careful of a danger of going long here is if there's a return to the 45 and a hold above it. If there is no hold above the 45, we're still going to have a bearish bias. We've had a short going on ever since, I think, last week and the beginning of this week, or around the 136 to 135.4 area. And it's, you really want to continue to hold it or take some profit off as it got down here, because we do have a break of this 45 that is bearish when that happens. But at the same time, If it returns to it and tests and comes back up, this means it was a false breakout, and then we should have a significant momentum to return to the top. On a longer time frame, if we look at these harmonic levels, we are at these extreme harmonics here, where we have this is our kind of first overbought condition, and then we have this is just a pivot, essentially just a regular pivot line. That's how the behavior is. But we are wanting to test this, may want to blast above it. We'll have to see how traders view this pair. The dollar, if we look at the dollar index, is certainly showing a lot of weakness right here. So that's going to affect all of the dollar pairs. So you want to be aware of that. Just careful of going long or short. The really easy way to watch this is, putting a short around 1349. And then we have a long bias if we hold above the 45. So if we have a retest of, if we break above, but then we retest the 135.4 value area, we'll want to have a long bias. All right, but otherwise, this is still a lot of resistance right here. In fact, yeah, we did have a breakout in the Bollingers, bounced off that, and these were favorable conditions for that. Now we're moving up again. We'll see what price wants to do there. The euro pound pair. Yeah, I mean that's looking fairly healthy for a continued move down, but when you enter a squeeze and you bust out of these Bollinger Bands, okay? Bollinger Bands, I love having them around because they really help tell you whether the move out of a squeeze is false or honest. And when we are busting out of the Bollingers and we're actually trading above the bands and we are in overbought conditions, those are good signs that there will be some retreat in price. Doesn't mean the trend will continue. It just means that we'll have a retreat in price. And a very normal place for it to want to come back down to is the 8867. So shorting, even right now, it's really the same as yesterday. Short at 8898. But then if you want to re-enter long or cover that, that 0.8867 is a good area. All right. So we've got a couple good options to short, cover, go long, and we'll see what happens. This art, as we're moving forward, let's put that cycle in here again. On the 16th, we have the new moon. Excuse me. How has the euro pound pair traded moon phases? I'm sure it's like anything and everything else. Yep. But I'll tell you that. Let me clear this up a little bit. That the the euro pound pair is probably one of the most efficient and easiest pairs to trade. It responds to technical structure the most. It responds to value areas the most. It is more when you have probabilities, they pan out the most. It's a really nice pair to trade if you don't trade this. If you're from like the U.S. and Canada, and this may not be a pair you trade a lot, but I would really encourage you to give it a look and give it a go. It really does like to trade structure very nicely, and on moon phases, this one responds very well. Even in a bull trend, you could actually, with this pair, fairly safely always go short during new moons and always buy the full moons and go short the new, buy the full, short the new, buy the. You wouldn't want to do that one. I mean, you would have been stopped out on that one. But yeah, the oscillators kind of help you out in this realm. If you're going to do moon phase trading and hold for longer terms, using the oscillators will really help you out to determine whether or not you should participate in any one of these phases. So yeah, this is one of my favorite pairs to trade. I really like this one. Okay, well, let's go back here quick. The pound, it looked like it got halted on that 45. Yep, it did. Got a little resistance there. We're not, but we've traded it. But we closed below it on the hourly. No, wait. No. We tried to go above it just during that because that hourly closed. All right, taking a peek at all of the ones we talked about. So the gold trade kind of got a new. Sorry, guys. Gold trade kind of got a neutral view on this. Want to wait for something, but short at 1310.3 is the trade there. The dollar yen. Only want to go long above 111.6. Still kind of weakness here. There it could be a nice move to the south, which really to go short, not. I definitely going short. We should have done back here. I'm not interested in trying that again. The euro as well, we do have a short bias because we're inside this arc. We're still below the 45, so we should see. And momentum is obviously getting a little slower up here. We're not getting as much participation at those levels. The New Zealand dollar pair again, very, very, very. It's in really high overbought territory. It's a good pair to look. We do have a short bias on this one. And keep your eye on that. Aussie dollar didn't have a trade. Pound dollar, we were just talking about this one, and the same with the euro pound. We just reviewed that one. Okay, let's switch on over to cryptocurrencies, which have been a bit of your featured trader here. Yours truly has been really frustrated with South Korea. South Korea's government is messing everybody up. All right. Now, why am I at 5 minutes? What was I thinking there? So, well, that is not. Let's look at the big guy, Bitcoin. And we'll get rid of Bollinger Bands. So we are at a really, really cool point here. This red vertical line is a pivot in time. If you're not familiar how time works with Gann analysis, if you're not familiar with that style and approach, you have to kind of put on your tinfoil hat. I will show you a quick little, not disclaimer, but a thing about me when I take on private clients and trading accounts. I will show them a little bit about what they're getting into. So if they ever ask questions that sound crazy, that's my thing. I'll make this real quick. That time is the true catalyst of price movement. All right. This guy Gann, I'm not going to go into a long series on this, but the thing that I'm talking about is, all right, why isn't this moving? What the heck? Okay. Word of warning what to expect, okay? Your first reaction to the things I'm about to say, maybe, and maybe a good majority of it, is going to be you thinking that I sound like this down here. And this is what it all sounded like to me when I first started studying Gann's methods and his approach. All right. Also, I will say that any of the material you read on people who are students of Gann's, I don't call them experts, and because there's not a lot of people who call themselves Gann experts. They just call themselves students, and I think that's the best way to describe people who practice Gann theory. So it's going to sound like this. These squares that I've been drawing with these arcs, they are resistance, areas of resistance and support in a trend. So in a bull trend, when we get to one of these arcs, we should see some natural resistance, and when we blow through it, we just kind of keep moving. There was not a lot of testing here, but then if you notice that once we got to this arc, all right, once we got to this arc and we hit our first target up here, what did it do? And if you watched the old videos of this, I have not moved this arc. It's been here. This has been a very, if this was a shortable market, this would be so fun to short and trade. But unfortunately, we don't have that opportunity. But this has just been riding along. But then this is the thing you got to wrap your head around. When we enter inside this arc, when price gets inside of it, and it does not actively move up outside of it or down below it or outside of it, if it just travels through it and gets out because of time, which means that we just had to, like, if you look down below, it says it's 1700 on the 8th of January 2018, and the arc ends 10 o'clock last night. So whatever price we entered inside the arc, all right, this entire move does not exist. Okay, this is where it gets weird. This entire area is a lie. It is software, and your brain and your eyes do not know where price is actually at. So when you exit these arcs, these are like it's kind of like buffering, all right, like Netflix used to have to buffer a lot, so you'd be watching it and then all of a sudden things would get out of sync. That's exactly what's happening within these arcs. So when you exit, the buffering catches up and everything returns to normalcy, which means that price will snap back to near the value area that it entered at, which is right here, and that's where price came back. This always happens. If anything happens nearly 100% of the time in the market, this always happens. When you see price entering into an arc and just following the same slope, that means that time has paused for us, but it has not paused for us, but it has paused for price. It's like stuck in time. And then when we finally catch up, so does price, and that's where it went. All right. That's always something to look out for and watch. It's a very, very neat phenomenon that happens a lot. you can say that these arcs, why price is resisted here, was not because these are like price resistance lines, it's because these are resistance. This is resistance in time. And the only way to really get out of these arcs and to trade in a real value zone is you have to trade through them pretty harshly and violently. We can see that with the last square we had. Back here. So it's a much larger one. But we had price kind of stopping from wanting to trade in there and not wanting to participate in that. And then here we are. We just have to have these swift movements outside of it to get out. It does not like to be in time stasis. I know that sounds all sci-fi-y, but this is a way to view the market, that they are natural, that they are not random, that they are very predictable, and you can forecast efficiently and effectively. That's why right now, between really any time between a day before, a couple days before, and a couple days after where this time cycle is, you can have the move. So it looks like as we're getting closer to 111 at 6 p.m. that we're going to have our nice move to the top. So we'll have to see, because on our chart here on Bitcoin, I have a forecasted price area of 2-week target area of the 10th through the 16th of 17,876. That's the price target area. Does that seem weird? Probably, but I know for some folks who have not been with us for a long time, it's getting significantly less weird. Like the Ethereum trade I put out last week. See, oh yeah, I did this last. I came out with this on the 7th. When was that? Sunday. I thought I did it last Sunday before. Maybe I updated it. The Ethereum forecast. Yeah, I have to update this. I have it. So oh yeah, I really have to update that. That went way above. Oh, and I did put them in here too. So I had here that we would get to 1155 before the 8th of February, and that we would get to 1369 before the 14th and 16th, which we did. Those price targets were hit. And I hope you made some nice gains on those. And we were looking at this yesterday that I don't remember if it was with us or with the other session I do, but we were in these really extended price ranges, and this angle right here, this is called the 1-2 line, and what that means is that when price is trading at this level or above it, we are trading faster with price in time. We're trading that price is moving twice as fast as time is. And down here where the 45 is, that is our equilibrium. That is where price and time are moving evenly. It is not doing that up here. So we got stopped at this extreme trading level. We got stopped at the resistance arc. It just wasn't acting as support once it broke through. And so we should expect to see a snapback of value down to closer to the 45, or we'll just kind of even it out as we move. We'll have a consolidative move. But for right now, this is a normal move that should return some value. in Ethereum. We have already reached these that we reached these targets really fast. You know, like a month ahead of time. That's I get out of it. I do not participate in that movement anymore. If it hit the target early, cool. Then I'm just going to wait for it to return back to value and find another reentry, because it will more than likely want to hit this area again before that date, but it will trade below it for the time being. Litecoin, poor guy. Again, I want you to kind of take a look at this. Litecoin is still in its resistance arc. Where did it enter? At $263, right here. Let me put a array on there. All right. That I'm going to say that this is in the arc in time. You just got to give it a little leeway. These aren't like static zones. There's like a buffer around it, like any area in trading. But we are definitely inside this frozen time area. And I'll tell you what, this is a really great kind of setup. The lower we go here, think of time is still stopped. Time stopped when it entered inside here because it hasn't traded outside of it. So technically prices right here, our eyeballs are lying to us. But this is where price is at. Software is lying, prices. We're moving forward, but it's stuck. So wherever it is moving right now, unless it moves down south very fast and very rapidly with a very vertical move, you know, we are still technically at $263. So that means if price wants to get out of here and move this way without going in a downslope anymore, it will snap back up to this area. And let's look at this further. Theoretically, price could trade within this arc all the way to the very end on the 28th, which is a new full moon on the 31st. So trade all the way back down to here at a full moon, where that's at a market bottom, which is where it would be a great buy entry. It would be really cool for price to get down there and then start its other rest up. But I still have Litecoin at 362 by the 4th of February. You know, it'll be weird if we get this really flat movement through here. Otherwise, we'll just want to shift down a lot. But again, to get out of here, it's going to have to be a very fast move out, and you know, we'll see if that works out. Back to Bitcoin, you know, it's trying to recover, but this may be a little bear flaggy. We may come all the way down to 1250. Now, we can forecast where we may go down to from here. All right, let me move that there. Okay, what are we trading at right now? We are trading at, I know it's taking, I'm going almost double the time I'm usually with you, but we're at, we have a lot of things going on. We're at 1362. All right. Wait a minute, what was that? 13 what? 13,622. Mm-hmm, 116. Okay. Oh, that's telling. 270. So if we're going to move forward, $14,844 could be the next price by the 4th, or if we're, what are we on the 11th today? If we're going to keep moving up, then we should look at 119, 14,161. Okay, let's adjust that up there quick. We'll say 14,161. All right, and then let's change that to then the next lower area, which is scary to think about. We have a couple ranges on that. So we're at 116, so 180 degrees from our current position is 96, 92.16. That could be our next. Yeah, that is a long ways down there. That's beyond 10. Well, that is a place that we could end up. Nearest high mark is here, although wouldn't I be a little bit more real? Well, it is realistic, but if we go by the next 45 angle, we would be at 111. That is 1232. 1, 1, 2, 3, 2, 1. I guess I didn't need to do that. I already had that written there. Actually, that won't be on the 13th. That would be like on the how many did we go back? Well, I think like 8 days. Actually, it'd be like the 16th. Yeah, it'd be on the moon phase day. Okay, so those are that's kind of where our target hit areas are. Our next lowest areas here, next highest areas here. By 113 and by 116. Okay. Anyways, no trade on Bitcoin right now. We really want to get above the 14,662 area and stay above it. But it would be nice that after 6 p.m. Central Time, if price is still below 14,662. All right, no Ethereum trade, no Litecoin trade, but Bitcoin's probably the only one here. I'm not going to really go through all the altcoins. The only other kind of major coin would probably be Bitcoin Cash. It's it's not a very fun trading coin, but it's just one that you might want to. I like to buy and hang on to it when it gets swing lows. I like to accumulate a little bit of it because Bitcoin Cash is more efficient than Bitcoin. Bitcoin itself is actually a really crappy cryptocurrency. It's slow. It's ponderous. It's expensive. It's really not a great. Its blockchain stinks. Litecoin actually has more traffic and is more efficient than all the cryptocurrencies combined. Litecoin is a super fast transaction chain. It is very good. It's really undervalued. But anyways, hey, thanks for sticking with me a lot longer than we usually talk. I hope you found some value in this today. Please let the Forex Lens guys know if there's something else that I could go over with you. Give us an email. And again, remember to check the Forex Lens portal because the trade alerts are going to be on there, on the signals button. And yeah, have a great trading day. Trade smart. Don't trade scared. Don't trade hopeful. And we will see you tomorrow morning. Bye-bye.